Guys, welcome to trading session number 14. We are looking at the S&P 500 as of today, Friday the 15th of December 2023. If we zoom in here, we are looking at this big green jump right here. That was Wednesday. That was the Federal Reserve coming out, Jerome Powell, talking about how they were going to unchange rates. We're going to leave rates where they're at, and we are expecting 3 rate cuts in 2024. And the market took it. You can see the reaction of what the market did. And if we go to the 5-day, I mean, just look at that, guys. On Wednesday, it just popped. It was consolidating the whole day until they came out. The Fed came out with the announcement, and Jerome Powell started speaking. It popped, started correcting there, and then it finished great. And then, pre-market, after hours, we started seeing it, higher highs. Thursday, yesterday, we saw it consolidate with it moving down below the 200-day and then coming back up and meeting the 200-day. And you see it kind of working its way, just consolidating the whole time. And now, today on Friday, we do see it trading below the 200-day and the 50-day moving average there. So that is the S&P 500 right now, reacting to the news. If we go over, let's go to the 1-day to show you that. So this is the 1-day, the S&P 500. You can see it really consolidating as we saw on the 5-day, and now it's trading below the 200-day on the 1 minute, and now it's kind of meeting the 50-day. So it's kind of a good sign, but you see it kind of dropping toward with the 50-day there. So we want it to either come back up, and then we can work our way towards Monday and play it accordingly. Or if it continues to sell off, it is a good sign for dollar cost averaging investors to start buying again. So all right, so we're back on the 6-month here. Let's bring over this news here. So December 15th, Dow ticks lower after hitting fresh all-time highs. Nasdaq 100 heads for record close. So you could pretty much see, what the market is doing here. I'll leave this in the description below, but it's mainly right here. Wall Street rallies this week after Federal Reserve on Wednesday made that its efforts to tamp down inflation are taking hold and indicated 3 interest rate cuts are coming in 2024. November retail sales data that came in stronger than expected yesterday. This week's cooler inflation readings added to hopes the Federal Reserve could navigate a soft landing, guys. We don't want the market to get all out of whack and then cause a recession. So we are trying to, develop that soft landing. So that is what the Fed is doing. You could check out this article of live updates on CNBC in the description below. So you can check that out. All right, so now let's dive into the portfolio. Let's dive into what is going on with our Mogul 30 here. So we have MGM being the worst performing stock in the portfolio here. We see it really pop up and looking healthy above the 200-day and above the 50-day. But now you see it the last couple days selling off. So we got a 5-day chart here. You can really see the pop up right here at the high here of 45, and now it's popping down towards $43 area. So that's still trading below. You see the 50-day crossing the 200-day there. So that is the worst performing stock in the Mogul Fellows 30 right now. And we could potentially buy. Let's go back to the 6-month. We typically like to see the 6-month chart RSI area in the 30 area, so we're below. It's pretty much fair value right now. We're gonna wait and see if this continues to sell off in the next coming week or so. So we'll continue watching MGM and see what that is doing. Also, DraftKings here, we have selling off. That is 34. That could be a play today. 30 almost at oversold values. So that could be a play. Johnson & Johnson, we have 42. PayPal, we have a 52. Block, 65 there. Starbucks, we have 41. Coca-Cola could be a play. We have it in the 30s there, 34. We have Disney, 53. So you kind of see what I'm looking for. I'm looking for the relative strength index in oversold values here. So we have Ford at 69. And then we typically like to trim around, high 60s up all the way up to 100. So the relative strength index is 0 to 100. And, we like to buy oversold and trim overbought values. So I'm just skimming the market here, what's going on. It changes every day, guys. So you could come in here and look at that. We have Lockheed Martin at 35 RSI. So I think it's DraftKings, Coca-Cola, and Lockheed Martin that we're looking at today. Could also dive into the positions. The positions have a lot to do with it as well. Kind of want to even those out, stay diversified, and see which one has like the lowest market value. So you could try to even them out. So yeah, guys, I think we're gonna check out DraftKings. So as I said earlier, this changes every day, guys. So the stocks change every day, and you could come over here on your watch list. You could see what the daily changes. It looks like Costco today is up 4.38%. That is at 76. So that would be a stock we would consider trimming. Really just depends on our profit and loss, our P&L percentage, stuff like that. We don't want to trim, a low market value stock if it's only, profiting us, say, $10, $20. We want to continue to grow that position, so we would have to wait and be patient for that to come back down to be able to buy more at a cheaper price. But we'll look at Costco, because Costco looks like it's really overbought. Let's see here. What else do we got? Meta working its way up towards the 70 mark. Looks like we have Home Depot popping, and that is at the 70 mark as well. All right, so let's do our buy first. I think I said DraftKings. DraftKings is at 34. Let's go back to the positions here. DraftKings. Let's look at DraftKings. DraftKings is actually one of the best performing stocks in the portfolio, which is strange because it's down. So open P&L wise, let's go to market value just because I want to see where it's at. All right, where is it here? DraftKings, there it is. We got it at 91 market value with a $51 open P&L. Let's go back to Coca-Cola. So where's Coca-Cola at here? We have a 73, so that's looking better to add more into Coca-Cola than it is DraftKings. Plus, we want to buy it at hopefully a lower average price. So our average price is $59.29. It's trading at $58.49. So far it's Coca-Cola being the winner right now for us to put money in. I believe the other one, now let's dive into Lockheed Martin here. So we got Lockheed Martin at 37 RSI. I believe Lockheed Martin is 86. So yeah, guys, I think we're gonna go with Coca-Cola, guys. Let's dive into Coca-Cola here as the buy. see 35 RSI on the 6-month 4-hour chart here. Let's go ahead and lock in a $10 buy. We're not doing stop loss. We're not doing take profit. Lock in $10 buy Coca-Cola. So we're going to buy KO, Coca-Cola, $10 buy market. Danforth, extended hours no, 0.17094 shares. Let's go ahead and lock that in. All right. Got a notification on my phone. We got filled at 58.48, guys. So that is what we got filled at. All right, guys. So let's go ahead and see if we want to trim. What we do is we do fractional shares until a position hits a share, and we do trim 1 share, 2 share, 3 shares at a time. To see if, to lock in profits pretty much, and to pull money out when, the stock is overbought, and then we buy when it's oversold. So let's go ahead and see. It looks like the only eligible ones right here are Tesla. We have Amazon at 1.4688. Just looking at 59 RSI. We have Apple at 60 with 127673 quantity. We have DraftKings. DraftKings, I believe, is selling off, so that's at 35. Let's see here. I just don't think the ones that are down here are worth trimming. We would like to see a better money return. Palantir, we could. No, it's at 52. We want to see that pop more. We have Block at, if you're looking at the open P&L percentage, all of them look great, guys. All of them look great, besides maybe the ones down here under 5. We like to see 5 or more, but just because the account is still so small, we want to, keep the average price where we bought it at. We don't want to mess that up. But if we see a high market value and it's overbought, we're obviously going to lock in some profits. So that's why we're so hesitant to really trim our position, because we really don't want to screw up that the average price, because once we trim, the average price gets all out of whack, and we don't want that. So let's hold off again from trimming. I know it is pretty, these trading sessions are pretty, I wouldn't say boring, but like you could tell what we're doing. You could tell what is going in my mind when I'm buying, and what is going in my mind when I'm selling. And that is the purpose of these trading sessions. Obviously, when there's more money in the account, it's going to be a lot more exciting, and we are going to be trimming, because we're going to have a lot more shares and a lot more profit to be able to start trimming, guys. So we're gonna hold off from trimming. We've only had 2 trimmings in the portfolio. That was Tesla, I believe that was a couple weeks ago, and then we've had the Airbnb trim, and those were the only 2 so far. So if I'm correct, we've only trimmed like $200 something dollars. So and then we did deposit $3,000 in the account. There are more deposits on their way. It's going to be coming very soon, and I'm very excited for 2024, because 2024 is going to be a very exciting year to be able to trade on here as well as on the Discord, guys. If you're not part of the Discord yet, you want to be a part of a brotherhood of like-minded individuals that love personal finance, love the stock market, loves personal development, then you need to get in there, guys. The invite is on our website. You go to mogulfellows.com and you'll see the membership tab. You click on that, read about it, and I believe right now it is free to get in there. So get in there while it's free, guys. I am going to start charging for it soon. And we're going to be using those profits to be able to put back into the portfolio to create more wealth for the club, for Mogul Fellows itself, to be able to build this empire, guys. So thank you guys for watching this trading session. I believe this trading session number 14. Just to clarify, this week was a great week for stocks. The Federal Reserve really pumped up the market. We saw really, great things. If we go to SPY once again, we see that pop up. We saw, the 5-day chart where, Wednesday when the Fed was talking, or sorry, when Jerome Powell was talking, you saw it really pop up and saw great things with the market and people buying. We got, the Federal Reserve wanting to cut rates in 2024, holding off, hiking rates. And then we also had some good labor data in the past week as well. So that's really what is pumping the market to be able to create and develop this soft landing and not cause a recession. So I want to thank you guys so much for watching this trading session. Leave a comment below if you guys are watching these through. I know right now these aren't really exciting, but in the future they are going to be a lot more exciting than the ones now. So thank you guys for watching. Make sure you subscribe, hit the notification bell, like this video for the YouTube algorithm, and I wish you guys a happy Friday and a great weekend. See you guys Monday. Hit the outro.